What's happening, Hardscapers? This is episode 233 of the How to Hardscape podcast, where we talk about how you can start and grow your hardscaping business. And on today's episode, I'm going to be talking about numbers, about finances, and why you should not be comparing your business to others out there. If you are hearing this is just prompted from a demo that I did for somebody, and just talking about how software can help your business, but also some things that came up in conversation that we're going to be discussing today, and why listening to other people and their numbers and their percentages and their markups, all of that may not be helpful to you and your business. So we're going to be touching on that. And if you are interested in that software that we have, that's How to Hardscape Headquarters. That's included in our membership package. So with that, How to Hardscape Headquarters, you get budgeting, estimating, job costing, time tracking, timesheets, scheduling, and we're going to continue to add more features. Like one of our newest features coming out before the end of the year here, it's going to be group chats or company-wide chats or one-on-one chats. And every time you create a project, a group chat is going to be incorporated, or it's going to be made with the employees that are included on that project immediately, so that you can have open communication with all of those employees, with the foreman, with the project manager, whoever is on that project. And it's also going to be documented throughout the project. So you can always go, once a project's completed, you can always go back into that project a year later and be able to see that chat, so you can see the documentation on anything that came up there. We've also got a client portal coming before the end of the year, and a lot of different features coming. And then next year, before the beginning of next season, we'll have the app out as well. So lots of great features with that. Included in that is also our course content resources. So we've got installation training videos with tests at the end of them, so that you can document how your employees are doing through those courses and be able to monitor how they're doing and get a certificate of completion at the end of it. And we're going to be adding to that course content library as well to allow you to assign these courses to your employees, so that this software can also be some sort of HR resource for your business as well there. And as we add more resources or features, our pricing is going to increase, except for users that are already locked in on their pricing, already signed up. Once you're signed up, you're locked in, and you will not get those price increases as more features and more courses are added into our library there. And included in this is monthly meetings that we're going to kick off next year. We've also got a workshop this month, and into January, we're going to be covering installation courses. We're going to be covering budgeting and estimating, and we're going to be covering in January building a website from scratch, a WordPress website with search engine optimization. So all of that's going to be covered within the membership pricing. And we're going to continue to do those workshops. The goal is to create workshops for the kickoff of a new season. So sometime in about March, where you can just send your employees to this and treat it as an onboarding resource or a training resource, as well as using the courses that are already in the course content library to help you in your business. So if any of that interests you, just reach out to me at How to Hardscape on Instagram, or go to members.howtohardscape.com. And we also want to say thank you to our sponsor, Cycle CPA. If you're looking for bookkeeping, accounting, CFO services, reach out to Cycle CPA at cycle_CPA on Instagram, or www.cyclecpa.com. Let them know How to Hardscape sent you for $200 off their services there. And without further ado, let's get into today's episode. All right, as I mentioned, this was prompted from a conversation that I had with somebody, and I'm going to leave their name out of it, obviously, but I did ask them if I could talk about it on the podcast here. And this is something that during a demo, somebody asked me, is your software going to make me more profitable? And this is my answer to them. I said, the software is just another tool, or a piece of equipment in your business. So as you add more tools or equipment in your business, if you use them in the right way, they will add to your efficiency. They will make you more profitable from that. And a software is just like that, a tool or a piece of equipment. But if it's not used, or if it's not used properly, or you just don't get the full value from the software, no, it's not going to make you more profitable. It's actually going to add to your expenses because it's a monthly recurring pricing for that. Just like if you were to finance a piece of equipment and just let it sit in your yard and nothing, you wouldn't do anything with it. It's not going to make you more profitable. It's not being used, and it's not being used to the fullest of its ability. And that was my answer to them. And then they pointed to another software and said, well, I heard this person talk about how using this software, they went from X percentage to Y percentage of profit in a single year, and they attribute it solely to the software. And I at this point, and I've talked about this before, whenever I talk about kind of knowing your numbers or finances in your business on this podcast, and it's always whatever somebody says, understand first their business or their business model if you can, and secondly, understand that somebody's numbers in their business may not make sense in your business. And I'm going to give a bunch of examples throughout this episode to kind of explain my point here from this. The reason why in this certain scenario, and it was a great increase in profitability for this individual and for their business. And that's incredible. Really good on them. But to attribute it all to a software, one, it's a software should take time off of your plate in the long run. It may have some initial setups or setup costs or time invested into it, but in the long run, it should take time off your plate in putting together an estimate, in putting it together a purchase order, in preparing a proposal. And our software does all that. It takes time off your plate because once you have everything in place, I can get a estimate ready in 5 minutes. And then from that estimate automatically is generated a purchase order with all the items for the separate vendors that I purchased them from. So if I have an estimate and it's got pavers and it's got gravel, and I buy pavers from one vendor and I buy gravel from another vendor, our software is going to create 2 separate purchase orders, one for each of those materials and one for each of those vendors, essentially. So 2 purchase orders, one for the gravel from one vendor, one for the pavers from another vendor. And that's going to save you a lot of time. And after having created an estimate, then you have to go through and pick out the materials and get those purchase orders ready. Additionally, with proposals, based on your production group that you choose. So let's say I'm putting together a work area patio, and I choose my production group pavers or production group patio, whatever you name it in our software. There's also an area in that production group when you're creating it where you can spell out line by line what your work scope is, how you build a paver patio. And then whenever you choose that production group for a specific work area, it's going to pull that information and automatically put it into the proposal so that you don't always have to type out how you prepare your pavers. And I think that's going to be incredibly important. I've been doing it my whole time in business, putting together a very in-depth and detailed proposal, but also my YouTube videos, including those in the proposals as well, so that they can click on those and be able to see them. But that's going to save you time. It's also going to allow you to stand out from other contractors that may be bidding that job in the near future when things get a little bit more difficult to land jobs. It's just going to help you stand out, and it's not going to take you more time. It's going to take away from that time to put that proposal together. And that's the whole idea of a software, is being able to buy back some of your time, get more in control, or if you have an office person, to maybe allow them to be able to estimate projects and you don't have to watch over them because it's just based on production groups or production rates, and your materials are already in there based on templates and all of that. So it's all just meant to bring you back more time, maybe even save you a little bit of money as well. So not only will a software save you more time, it should also allow you to be more profitable in terms of that time. So maybe you can redirect your time elsewhere in your business to help you become more profitable. Or if you have, 2 full-time office staff, maybe you can go down to 1 full-time office staff, or maybe just a part-timer based on the economic conditions that you find yourself in. And that then monthly cost of that software becomes a nominal amount when when you've downsized in terms of the actual human resources within your business. And then on top of that, and especially what we're aiming for with our software, is being able to create a resource that allows you to build a company culture, and to build a company culture based on education, and making sure that your employees have a framework that they know that they can move up in your business, and what it takes to help them move up in your business, and whether that's assigning them training resources or assigning them our courses and so on, and being able to monitor how they're doing, and just giving them agency over where they go in your business. Okay, so going back to this individual that went from X% to Y%, why did they do it, and why do they attribute it to the software? Well, if it's attributed to the software, it's because of anything that I've already talked about. But when you look deeper into the business, the reason why they became so much more profitable is this individual went from working as not in the field, not being a labor producing employee, to downsizing and actually becoming a labor producing employee, and actually going from 2 crews down to 1 crew and them in the field full time. So as an owner, when you do that, the obvious thing is you become more productive, because the owner is always on the job site. They're setting the tone of the work, and they have likely sold the job, designed the job, and all that information is in their head, and they're able to direct their employees as they need. Secondly, and most importantly, they're more profitable because their salary went from being an overhead expense when they were not a labor producing employee down to a labor producing, or part of direct costs on that project. And the same would be true if you are in the similar situation where you're going from 1 crew to 2 crews, and you yourself want to just solely rely on you to do sales, design, and maybe running around for your crews and making sure that they're supplied with whatever they need. At that point, you get out of the field, you become not a labor producing employee, and you become an overhead expense in your business. And it just makes sense that $100,000, let's say, that you pay yourself in a season, and you went from being a labor producing employee, so that's tied directly to the project. You're on the project, you're doing the work, you're setting that tone on site. Now taking all of that labor, you're down a laborer, and you become more so project manager in a sense, or sales and designer, or all the different roles that you're doing, but you're out of the field, and that becomes an overhead expense, and that is over and above what that labor producing cost of your salary would be. And it's at that point where you'll see a drawback in a profit percentage, because at that point you likely have not had somebody that is solely an overhead expense in your business. You've likely only had laborers or foremen or labor producing employees, which is where you make your money. You're selling labor in your business. Whereas now you've taken one of those labor producing employees, you yourself as the owner, and you've made them an overhead expense. But when you scale back and you take your overhead expense of your $100,000 salary and you put it back into labor producing, once again, you become more profitable because you don't have that overhead cost that you need to make up that doesn't have a direct labor tied to it, direct production tied to it. And that is why you become more profitable if you downsize, if you become an overhead expense to now becoming a labor producing employee. And that's where the profit percentage comes from. And it's just, I wanted to discuss it with this individual that brought it up with me on the demo, but also just talk about it here on the podcast, because no matter, and this goes for any business, you can listen to people talk about their numbers and their percentages and their markups and this and that. But if you don't understand their business, if you don't really dive into their numbers at all, it's hard to take it at face value, and it's even more difficult to apply that to your own business. Another example here would be partners in a business. Usually one partner is typically in the field as a labor producing employee, and another partner is an overhead expense and more so office sales, design, and so on. So in that sense, that partnership already is taking that next step up. Even if they have one crew, they have that overhead expense of one of their partners in the office, and they immediately might be a little bit less profitable than a company that has one owner and they are in the field 100% of the time. And then another reason why I say don't listen to others and their percentages and their profit percentages is because you don't know what they're paying themselves as an owner. And you don't know what that does to their profit percentage, because profit is everything that's left over even after the owner's salary has been paid. Not draws, not disbursements or whatever, but after that salary. And you can inflate your profit percentage by paying you yourself less in terms of a salary. Now, you should be paying yourself a competitive salary, but a lot of accountants will recommend a lowered salary and then the rest in disbursements based on the profit percentage. And that will increase your profit percentage. So, for example, if you have, let's say, a $50,000 salary, that's going to leave you with more profit percentage at the end of the day. Whereas somebody that makes $100,000 as opposed to $50,000, now there's $50,000 less profit. And that's how you can easily manipulate your profit percentage to be able to say that you are extremely profitable, but you are paying yourself well below market salary. And ultimately, it doesn't matter to me what you pay yourself. I always recommend when you're building a budget to add up all the different tasks that you do in your business, how much time you put into each of those tasks, and then what it would cost you to outsource those certain things or to hire somebody full time for those certain things, and incorporate all that into your salary. Now, whatever you pay yourself is totally up to you, and whatever your accountant might recommend. But that is how I go about my budget personally, because then you're accumulating what you deserve or what it would cost you if something happened to you and you had to not be able to work, especially if you're in the field, and you would have to hire somebody to take on the rest of your responsibilities, or the rest of your responsibilities that you cannot do. That money's already there. It's already accounted for. Okay, so I've talked about how profit can be manipulated. One by the owner's salary, or another by being able to downsize in your business and from becoming an overhead employee down to a actual labor producing employee, as well as the opposite of that, becoming a labor producing employee, to getting out of the field and becoming an overhead expense. You're going to see a dip in your profit percentage, but as you add more crews, you'll see an increase in that profit percentage, or if you become more efficient, and so on and so forth there. I just want to take a break from today's episode to talk about our sponsor, Cycle CPA. You may have a CRM or project management software in place, but what data are you using to ensure your estimating is accurate? Having a proper accounting setup and accurate bookkeeping done is key to understanding overhead expenses and other costs that must be recouped in your estimates. Cycle CPA is a remote bookkeeping and CFO firm that helps to connect the dots from the financial reports to the hardscape and landscape data needed in order to reach high profits. They provide landscape and hardscape industry benchmarking, job costing financials by service line, advisory meetings, and much more. Cycle CPA's team of accountants are specialized within the hardscape and landscape industry, and you can visit them at cyclecpa.com, and for $200 off, mention the How to Hardscape podcast. Now back to our episode. But I also want to talk about markups, because I also hear people talk about, well, how much should I mark up my materials? And the answer to that is always, well, what system of recovering your overhead do you want to use? And I always aim for the labor rate, or recovering my overhead through my labor rate. I know some people enjoy the Moore's method. I am not a fan of that personally. And I've talked about that in a previous episode, and I'll put that episode in the show notes if you want to listen to it. But it's not too far back. If you just scroll through the episode titles, you'll find it there. And the reason why I like the labor rate is it's a simple formula of how much time you have in a season and how much your overhead or your indirect costs are in your business. and giving you a percentage of how much that project is going to take away from your total hours in a season, to then take a percentage of your overhead, apply it to your labor. You boom, your overhead costs for that project, if that project is estimated properly, are going to be recovered, and especially if you have your overhead costs actually listed out and all of those expenses added up. Now, the Moore's method, it takes a lot of percentages of markups through various multiple overhead recovery systems. So you're recovering your overhead through a variety of different ways, whether that is labor, materials, subcontractors, and so on. So when you're using one method like the multiple overhead recovery system and you're applying a markup to materials, that markup is to recover your overhead. Whereas if you do it my way and you are recovering your overhead, 100% of your overhead costs through your labor based on that formula, any markup that you add to your materials is not to recover overhead. So somebody that needs to recover overhead through their materials is going to add a larger markup percentage than somebody that is going to do it my way through the labor rate, and their markup percentage should not be as high as somebody recovering overhead through their materials. And this is another reason why you should not use other people's markup percentage or other people's numbers within your business, within a software, and to apply them to your personal business. You don't know people's business models. You don't know how people are operating. You don't know which overhead recovery system people are using, if they're using one at all. You don't know how people are pricing their projects unless they sit down with you and they discuss every one of these things in depth with you. And then at that point, you can maybe understand their business model a little bit further and be able to come to these conclusions of, okay, why are they saying that they doubled their profitability percentage? Is that really because of a software, or is that because of other underlying things within their business that allowed them to become more profitable? Did they also buy more equipment? Did they buy more tools? Did they improve their systems and processes elsewhere in their business to help them become more profitable? Why is somebody on a Facebook forum saying that they mark up their materials 100%? Well, are they recovering their overhead through their materials, or are they recovering their overhead elsewhere? It's incredibly important to base other people's advice on where and what you want your business to look like. So don't take other people's advice or what they're talking about, especially when it comes to numbers and you want that larger number, larger percentage, profit percentage to be able to talk about how you became more profitable in your business. Don't take that at face value. Make sure you apply it to your business and what you want in your business. Obviously, starting out, knowing your numbers in general is a good place to start, to know that you are recovering all of your overhead that you need to in your business and that you're becoming profitable. If profitability is difficult in your business right now, then yes, software is going to make you more profitable because it's going to help you lay out your expenses line by line, and it's going to help you recover those expenses, those indirect expenses, not those direct expenses like labor and materials on a job site, but those indirect expenses is going to help you to recover those further. And yes, if you're just starting out, that's going to help you become more profitable. I hope that this really helped explain or understand where people are coming from when they're talking about their numbers. And I am very confident in our software, and that our software is a tool that's going to help you in your business as long as you use it and you make use of the resources available within it. But is it itself going to make you more profitable? It just depends on how much you decide to use it. It's definitely going to it's going to save you more time in the long run. Like I said, making purchase orders, making estimates, making proposals, all automated. There are systems and processes that we're working on further in it to help you. Like I talked about the HR side of things with your employees, giving them a direct route. That's going to hopefully help your business become more professional, also help your culture within your business. And then there's other things like time tracking, scheduling. These things are also going to help you with remaining organized and helping you get back some of your time within your business, and then you can use that time elsewhere in your business to help it grow as well. Once again, I hope you enjoyed this episode. I hope that it helped you in some way. If If you have any questions, if you have any comments, reach out to me at How to Hardscape. Love to talk to you further about this and anything that you hear. Like I said, always, if you hear people talk about their numbers, if you hear people talk about advice, always take it with a fine-tooth comb and see how it applies to you and your business. Everybody has different goals. Everybody is trying to build a different business or a different business model. It's always good to talk to those people further, understand their business a little bit further so that you can see how and what they're doing in their business and see how that applies to you. And if you want to dive into the How to Hardscape headquarters, that's members.howtohardscape.com. And our workshops kick off this next month, December. So you can sign up, get into those as well as our courses that are available as soon as you sign up there, and our software as soon as you sign up as well. So if you're looking to dive into a software this winter, that's members.howtohardscape.com to get started with that. Members will also be placed in a directory, so you can sign up your business for that directory. We get about 25,000 users on our howtohardscape.com website when the season starts to get going, when there's a little bit more momentum and leads start to come in. And a lot of those users can be homeowners or DIYers. And we want to put a resource together for our members to be found by those homeowners who may be looking or putting some research in and looking for a hardscaper to help them with their project or to do their project. So members will also be placed in that directory. And don't forget, we got lots of tons of free resources, including our job postings website. So if you have a job posting that you want to post, that's free for anybody. Just go to careers.howtohardscape.com. You just sign up, put your company information in, and put your job postings, whatever you want to add in there. We're going to be launching a book club in the new year as well. That'll be likely quarterly there. So lots of things that we've got in the works to just create an excellent resource for our listeners, for our audience, for our members, and all that. So if any of that interests you, just shoot me a message at How to Hardscape. And if you made it to the end here, thank you so much for listening. If you could do something for me, that would be leaving a rating and review. Spotify, Apple Podcasts, wherever you find us. Apple Podcasts, you can leave a rating and review. Spotify, just a rating. 5 stars would be amazing if this brought you any sort of value. I'd very much appreciate that. And check out our sponsors, Cycle CPA. If you need bookkeeping, accounting, CFO services, reach out to Cycle CPA at cyclecpa.com. Let them know How to Hardscape sent you for $200 off their services there. And once again, members.howtohardscape.com if you're looking for headquarters software or those course content resources. And we look forward to meeting with you next week on the How to Hardscape podcast.